Welcome back to Griffonomics, where we conduct financial investigations to define the risk before we look at the reward. Today, we're diving into Anterix Inc, ATEX. This is a company that has really positioned itself as a critical and maybe the sole enabler of the next generation of U.S. utility infrastructure.
That's right. And to put a fine point on it, Anterix is betting its exclusive nationwide 900 megahertz spectrum and $1.1 billion demonstrated intent pipeline will secure its position as the de facto private wireless solution for U.S. utilities, justifying its long-term asset value despite low reported JAP revenue and significant exposure to regulatory execution risk in spectrum clearing.
And that thesis, it immediately brings us to this massive, just glaring disconnect you see in the market. And that's really what we have to unpack for you today. You have Anterix serving a U.S. utility sector that is, by all accounts, poised to spend something like $1 trillion over the next 5 years. $1 trillion, yeah, it's a staggering number. On fundamental modernization, on decarbonization, on grid resilience. This is a transformation on a truly historical scale. And yet, Anterix's current market cap is, well, it's way below what even conservative analyses suggest its core asset is worth.
Which is that spectrum.
Exactly. The spectrum asset value is estimated at over $3 billion. So our mission today is to figure out how a company with that kind of potential asset in a $1 trillion market can have such low reported revenue. And, why this specific financial profile makes it such a complex, but maybe, just maybe, an explosive investment story. We really need to define the moat, the mechanism, and the regulatory risk that stands between its current stock price and that potential $3 billion valuation.
To start, let's define a business as simply as we can. Anterix is, at its heart, a spectrum monetization company, but it's hyper-focused exclusively on critical infrastructure. So its core operation is all about commercializing its licensed 900 megahertz spectrum. Specifically, that's the paired bands between 896.901 megahertz and 935.940 megahertz. And they use this to enable private LTE or PLTE wireless broadband networks. This isn't some small regional play, you have to understand. This is a nationwide asset.
Right, and this license, historically, it wasn't for broadband, was it? It was used for much simpler things.
Exactly. For years, it was for narrowband communication. Think two-way radios, paging systems, that kind of thing.
So the real pivot, the thing that created all this value, that came from the regulators.
Absolutely. The entire foundation of this asset's modern value comes directly from a pivotal FCC decision back in May of 2020. That ruling is what authorized the conversion of the specific 900 megahertz block from its original, low data narrowband use into a full-blown broadband application.
And that gave them what, a 6 megahertz block initially?
A 6 megahertz block, yes. And it was a block of highly desirable low-band licensed spectrum. And the key is it was dedicated exclusively to critical infrastructure, so it immediately solved a huge national problem.
Which was that utilities needed their own private, interference-free network.
Exactly. They needed high-capacity communications that were, and this is critical, standardized.
And that standardization point, that's what really separates this from the old legacy systems, right? The ones where you're locked into one vendor. This is a global platform we're talking about.
Precisely. These private networks aren't some kind of customized, proprietary, one-off solution that a utility gets trapped in for, decades. They're built entirely on globally recognized 3GPP standards.
So things like Band 106.
Right. Band 106 for LTE today, and then there's a clear upgrade path with N106 for 5G in the future. You really can't overstate the significance of using a global standard like this. It ensures total forward and backward compatibility. It future-proofs the enormous capital investment these utilities are making.
And from a practical standpoint, it means they aren't stuck with one hardware supplier.
Exactly. It guarantees them access to a vast, highly competitive global ecosystem of devices, modules, hardware, you name it. From all the big players, Ericsson, Nokia, GE, Vernova, and hundreds of others, it completely eliminates that vendor lock-in risk for the utility.
Okay, so standardization is the foundation for the ecosystem.
Yeah.
But let's talk physics. Why 900 megahertz? Why is that frequency superior to, say, the mid-band or high-band spectrum that public carriers use? Why should a utility care about that specific number?
It all comes down to propagation physics, especially when you're talking about massive, often rural service territories. 900 megahertz is a low-band frequency. The simple rule is the lower the frequency, the better the signal propagates through obstacles.
Obstacles like trees, hills, buildings.
All of it,
Yeah.
trees, hills, buildings, and the signal just travels much, much farther. So if you're a utility and you need to cover thousands of square miles of transmission and distribution lines,
You want a signal that can go the distance and isn't stopped by the first hill it meets.
you've got it. And that superior propagation translates directly into two massive advantages, both financial and operational.
Which are?
First is coverage. You get fewer dead zones, which means greater resilience. And second, which is crucial, is financial efficiency. They can build out these resilient, wide area broadband networks using significantly fewer radio sites.
So fewer towers.
Fewer towers, less real estate, lower instruction costs, lower maintenance costs. It just geometrically lowers the total cost of ownership, the TCO, for these huge multi-billion-dollar network build-outs. It's just much cheaper than trying to do the same thing with, say, 2.5 gigahertz or even mid-band C-band spectrum.
And it's licensed, which means it's private. No sharing with millions of cell phones.
That's the other non-negotiable piece. Because Anterix controls the license, the utilities get exclusive, interference-free connectivity. That's an absolute must-have for the kind of command and control applications they're running on the grid.
Okay, so the asset is scarce, it's unique, it's necessary. Now we have to confront the biggest point of confusion for investors, which you mentioned right up front in the thesis. This revenue paradox.
Yeah.
We have this incredibly valuable asset, but the company, Anterix, consistently reports very low GAAP revenue.
Yeah.
How does their contract structure explain this counterintuitive financial picture?
It's an asset value story that's being masked by accounting rules. That's the simplest way to put it. The whole business model is built around leasing this spectrum asset through extremely long-term contracts. We're typically talking 20 or even 30 years, often with renewal options baked in. The paradox, as you call it, arises because the utility customers, who are, very well-funded entities, they pay the majority of the contract cash proceeds up front.
Wait, okay. Why do they pay up front? That seems unusual for a lease.
The upfront cash is absolutely essential. It's used to fund Anterix's very substantial spectrum clearing costs. As we'll get into, they have to negotiate with and pay to relocate thousands of existing narrowband users all across the country. That process requires an immediate, massive outlay of capital.
So the utility is basically prepaying Anterix to fund the creation of the clear spectrum that they will then use.
Precisely. The utility pays Anterix. Anterix uses that money to clear the band, and in return, the utility gets a guaranteed, exclusive, multi-decade lease.
So the cash is flowing into Anterix's bank account today to fund all this regulatory work, but then the accountants and the IRS step in and say, not so fast.
That's it exactly. Under generally accepted accounting principles, or GAAP, that cash flow, even though it's received today, it can't be booked as revenue immediately. The reason is because the actual service, the spectrum lease, the benefit, is delivered over the full 20 or 30-year term. So the revenue has to be recognized pro rata, spread out evenly over that entire lease period.
Which means they're getting these huge cash injections today, but they can only report a tiny little slice of that in their quarterly GAAP revenue figures.
That is the entire story, and that's what results in the very low reported GAAP revenue that, frankly, scares away a lot of traditional investors who just look at a PS ratio. For instance, their trailing 12-month price-to-sales ratio is, well, it's extremely high, 63.9. If you saw that on a normal tech company, you'd run for the hills.
Right.
But you have to look deeper. The other side of that coin is their net margin, which sits at a staggering 716.1%. That huge margin gives you a hint of the robust underlying profitability once that initial investment in clearing is secured by the customer's cash.
So the big lesson here for anyone looking at this company is that Anterix is fundamentally a balance sheet story. It's an asset valuation story and a free cash flow story. You just can't analyze it using traditional quarterly revenue metrics.
Correct. And you see that stability playing out in their liquidity position. I mean, they're completely debt-free. As of the second quarter of fiscal year 2026, they reported $39.1 million in cash. And in a real sign of, excellent execution and confidence, they recently raised their cash proceeds guidance for the full fiscal year.
There is it from what, 80 million?
From $80 million up to $100 million, and that $20 million increase was purely because they were successful in accelerating customer payments and milestone deliveries. It brought in an extra $19 million in immediate cash flow.
Which really solidifies their ability to self-fund the rest of these complicated regulatory hurdles.
Exactly.
And that brings us directly to those regulatory hurdles.
Yeah.
Because this, I think, is the central execution risk. This is the defining factor that separates the current low stock price from that potential $3 billion valuation. And Anterix has to satisfy these specific, really complex FCC eligibility requirements. And they have to do it across all 3,233 counties they're targeting. So what exactly is this spectrum clearing process, and what's the single biggest technical requirement they face?
The process is, it's a non-optional, incredibly complex negotiation that spans thousands of local entities. The biggest single administrative hurdle is satisfying what's called the 90% broadband segment test. This is where the FCC mandates that the broadband applicant, in this case Anterix, must either hold, protect, or have formal agreements covering 90% or more of the licensed channels within that 6 megahertz broadband segment in a given county.
Okay, 90% of the channels in the county.
Yeah.
But it's not just the county itself, right?
Right.
I read there's a buffer zone, which sounds like it makes things even harder.
That's the twist that makes it exponentially more complex. You're right, they have to satisfy that 90% control threshold not just within the county borders, but also within a 70-mile radius that extends out from those borders.
Wow.
In a 6 megahertz block, you might be dealing with 240 potential licensed channels. So they need control or an agreement over at least 216 of them. That 70-mile radius is designed to prevent interference from bleeding over into neighboring counties.
So it forces them to negotiate with people who might not even be in the county a utility is trying to serve.
Right. It forces them to negotiate simultaneously with multiple incumbents, sometimes across state lines, who might only have a tiny marginal presence in the primary county of interest.
So when we say clearing, what we really mean is negotiating with thousands of existing narrowband users, local businesses, maybe a school district, small utilities, to either move them off the channels, buy their licenses outright, or pay for all their new retuning equipment. This sounds less like a technical task and more like a massive, multi-year, multi-billion-dollar real estate negotiation.
That is precisely the right analogy. It's a huge, decentralized logistical undertaking. They have to identify every single incumbent, assess their usage, negotiate a price for relocation or acquisition, and then actually execute the physical move. And only after Anterix can prove, with documentation, that they've satisfied that 90% test and a smaller 50% license spectrum test, only then can the final broadband license be issued by the FCC for that specific geographic area.
And until that license is issued, the utility can't fully deploy its high-capacity PLTE network.
Correct. The whole thing is on hold.
So let's get an update on where they are in this process. Given how enormous the task is, what kind of progress has management reported? Are we close?
The progress is actually highly encouraging. It suggests that a lot of that core execution risk is diminishing. Management has reported that they are currently closer to 85% of incumbents cleared nationwide.
85%? That's a lot.
It is, and maybe more importantly, they estimate that if they went to the FCC today, right now, they could immediately apply for licensing on 90% of the counties in the entire United States.
So that tells us that the vast majority of the low-hanging fruit, the easier negotiations, are pretty much done.
Substantially complete, yes. The remaining 15% of incumbents are, as you predict, the most complex, the most geographically dispersed systems that require the largest capital commitments to clear.
Can you give us a specific example of the kind of capital that's needed for one of these complex systems?
Yeah, in their financial disclosures, they gave an example of a single complex system clearing commitment. That one project required a total investment of $20 million.
For one system.
For one system. And Anterix had already funded a $14 million escrow account just to ensure that that clearing was completed. It underscores two things. First, the remaining costs are significant. And second, they are actively using that upfront cash from customers to de-risk and fund these specific commitments.
Okay, now let's tie this execution progress back to the big valuation disconnect we started with.
Sure.
The asset is carried on the balance sheet at, what, $325 million?
That's right.
Yet management is out there saying the market value is 10 times that. How do they justify a value over $3 billion?
They look at comparable market transactions for similar low-band desirable spectrum. Spectrum value is typically measured using a metric called M-Hertz POP.
Right, price per megahertz per person covered.
Exactly, the price paid per megahertz of spectrum covering one person. So the $325 million figure on the balance sheet, that's just the historical cost. But management argues, and independent analysts tend to agree, that if this spectrum were put up for auction today, it would fetch a significantly higher price.
And what are the comparables they're using to make that case?
Yeah. We look at recent low-band auctions, specifically the 600 megahertz auction and the AWS-3 auction. In those, segments saw prices that often exceeded $2 per megahertz POP. So a conservative, independent analysis for Anterix's 900 megahertz asset uses an estimate of around $1.83 per megahertz POP across their total coverage area. When you run that
You
calculation,
get to about $3.07 billion.
you get to an estimated underlying realized spectrum asset value of $3.07 billion.
That's a 10x multiplier on the book value, and it's justified by market comparables and the unique physics of this low-band frequency. So what you're saying is the market is essentially valuing the company today based on its low-JAP revenue and the risk tied to clearing that last 15% of incumbents while almost completely ignoring the embedded asset value.
Exactly. The company is, in effect, trading at a steep discount to the value of its raw inventory, the license spectrum, because that inventory is still locked up until these regulatory hurdles are finally overcome.
But the long-term upside isn't just about finishing the current clearing process. There's also a pretty significant regulatory tailwind that could increase the value of that asset by another 60% or so. Let's talk about the potential 5x5 expansion.
This is the really critical regulatory catalyst for their future growth and capacity. On January 15th, 2025, the FCC adopted what's called a Notice of Proposed Rulemaking, or an NPRM. An action like this indicates the FCC is giving very strong consideration to expanding the 900 megahertz broadband segment.
And the current segment is 6 megahertz, which is structured as a 3 by 3 megahertz channel pair. What are they proposing to expand it to?
The NPRM is looking to extend that dedicated spectrum block from the current 6 megahertz all the way up to 10 megahertz, so a 5 by 5 megahertz channel.
Which is almost double the capacity.
Right.
That's a massive amount of optionality for the utilities that sign on.
It is. A 10 megahertz channel provides significantly more capacity and much higher throughput. And that's essential to support the escalating data demands that utilities are facing. Think about dense deployments of sensors, high-resolution video streams from drones inspecting infrastructure, or just supporting the massive amounts of data coming from distributed energy resources, DRR.
Again, the FCC's action here, their willingness to even propose this, that's a huge vote of confidence.
It's seen as an extremely strong validation of this whole 900 megahertz private utility broadband movement. It shows they see it as a national priority.
And this isn't just Anterix lobbying for this change in a vacuum.
Yeah.
We're seeing a powerful coalition of the utilities themselves supporting this expansion.
Oh, the weight behind this NPRM is enormous. It includes major industry players and existing Anterix customers, people like Amerin, Evergy, Xcel Energy, and Southern Link. The fact that the end users, the utility companies that are investing billions in their own grids, are actively petitioning the federal government for this expansion, it just confirms how necessary this spectrum is for their long-term strategic roadmaps. It greatly de-risks the regulatory timeline risks associated with getting this expansion approved.
All right, let's pivot to the demand side of the equation. Why are utilities spending this much capital right now? We said the sector is spending $1 trillion over 5 years. What is the core crisis that's driving the adoption of private LTE, and why is relying on public commercial carriers just not an option anymore?
Utilities are facing this confluence of compounding crises that have really made their reliance on existing legacy communication infrastructure totally untenable. I mean, first you have massive grid modernization efforts, just replacing infrastructure that's decades old. Then you have the critical, very load-intensive transition to decarbonization.
Right, integrating renewables like solar and wind.
Which requires minute-to-minute, second-to-second communication to manage. And then there's the big one, the accelerating existential threat of cybersecurity.
Yeah, the FBI reports on critical infrastructure threats seem to get darker and darker every quarter.
They do. The FBI is reporting growing incidences that specifically target the operational technology, the OT systems, within critical infrastructure. The vulnerability is just so clear. If your command and control systems are connected to the public internet, they are vulnerable. Vulnerable to supply chain compromise, to ransomware, or even to state-sponsored attacks that are aiming for real kinetic damage.
And when a crisis does hit, whether it's a cyber attack or a massive storm, that's when the reliance on commercial carrier networks really fails them.
That's the breaking point. We have a specific case highlighted in the source material, a severe wind event that resulted in power loss to 50% of a major Northeast utilities customer base. During that event, the public commercial networks that the utility sometimes relied on for its SCADA systems, They either suffered damage, they were deprioritized for consumer traffic, or they simply didn't have the coverage needed to support the emergency restoration efforts.
So public networks are built for best effort consumer bandwidth, not mission-critical control.
Not at all. And this is where the air-gapped nature of a PLTE network, it really transitions from being just a technical feature to a national security imperative.
Explain that. What does air-gapped really mean here?
The core solution that Private LTE offers is end-to-end control, and with it, inherently superior security. An air-gapped system means it is physically or logically isolated from the public internet, at least for all mission-critical control functions. That isolation provides the guaranteed protected connectivity that public networks simply cannot. By creating this dedicated private network, utilities can shield their core functions like remote switching, substation monitoring, energy flow management from any external hackers or bad actors who might try to leverage public access points.
So it's about owning the digital highway for your most critical control signals, preventing any kind of catastrophic external interference.
That's the perfect way to put it.
Let's delve into those mission-critical functions. What are the specific applications that absolutely demand the kind of low-latency consistency that this 900 megahertz PLTE enables? We hear about milliseconds, but why do milliseconds actually matter when you're dealing with electricity?
Milliseconds matter because electricity moves at the speed of light, and the grid itself operates on a constant knife edge of stability. This network enables a real-time data flow that's measured in milliseconds, and that's absolutely necessary for the kind of high-impact automation that, frankly, protects human life and multi-million-dollar assets.
So let's talk about those safety applications. What's a key example?
One of the most critical and compelling use cases is safety and mitigation, especially when it comes to wildfire risks. We've seen San Diego Gas and Electric, SDG&E, become a real leader in this area. They use these high-speed systems for what's called falling conductor protection. So if a power line breaks, maybe from high winds or ice, or a car hits a pole, the system can detect that event and actually turn off the electricity before the damaged line hits the ground.
Before it can spark a fire.
Before it can spark a potentially destructive wildfire.
That is a profound shift in operational liability. You're moving from just reacting to an incident to proactively mitigating the disaster before it even starts. The financial difference between fighting a massive wildfire and preventing it has to be the real justification for this investment.
That is the core economic justification right there. I mean, the liability costs from grid-sparked wildfires just in California alone run into the tens of billions of dollars. Proactive mitigation is an existential necessity for these companies.
And beyond safety.
Beyond safety, the private network supports foundational operational systems. Things like direct transfer trip, or DTT, and fault location, isolation, and service restoration, which is known as FLISR.
Okay, let's quickly define those. They sound highly technical, but they seem essential.
DTT is vital for integrating all those distributed energy resources we talked about. Microgrids, solar arrays, battery storage onto the main grid. When a large distributed resource trips offline unexpectedly, DTT allows the utility to immediately isolate that problem area to maintain grid stability and prevent a cascade failure. FISR, on the other hand, automates the outage response. When a fault occurs on a line, the system can rapidly locate the problem, isolate just the damaged segment, and then automatically reroute power to restore service to all the unaffected areas, often within just a few seconds.
And this is where that consistent latency, that 110 millisecond metric that was mentioned, becomes absolutely critical.
Yes. Lab testing has confirmed the superior reliability of this platform for these exact applications. Private LTE DTT systems performed extremely well, achieving 100% successful delivery within 110 milliseconds round trip. That consistency and speed are non-negotiable. If you tried to run DTT or FLSR over a best effort public network, a momentary spike in TikTok traffic could delay the signal by hundreds of milliseconds, and that could lead to equipment damage, grid instability, or even a catastrophic failure. The private network guarantees the necessary quality of service.
Looking ahead now, how does this private network foundation position utilities for the next wave of technology? I'm thinking specifically about the explosion of data and the implementation of AI.
This private network is the mandatory precursor for any real digital transformation. First, it directly addresses the massive installed base of outdated metering infrastructure. Over 90% of U.S. meters right now use proprietary mesh technology for communication.
And what's the downside of that proprietary mesh technology? Why is migration so necessary?
Proprietary mesh has some severe limitations. It often creates vendor lock-in, making it difficult or impossible to integrate different devices or upgrade systems without just buying a whole new set of infrastructure from the original vendor. And crucially, it's typically very low bandwidth. It can only send small packets of data and only infrequently. This is just utterly insufficient for the needs of a modern, data-intensive grid. The PLTE network provides a clear, standardized path to migrate to a standards-based AMI 2.0 platform, which offers high bandwidth and true interoperability.
And once that big standardized data pipe is open, it can feed the next generation of operational tools.
Precisely. The second major benefit is that it creates the foundational network required for AI-enabled grid infrastructure. AI needs clean, voluminous, high-speed data to function properly. And AI integration is predicted to enhance workforce productivity, think autonomous inspection drones, improve grid planning through much better load forecasting, and provide rapid, automated security breach detection.
And because the network is standardized, the data coming in is normalized. And that seems like it has implications far beyond any single utility.
That is the national security angle. The standardized nature of the 3GPP system enables normalized data collection that can feed into centralized analytic systems or data lakes across multiple utilities at the same time. Aggregating this data from Xcel Energy, from SDG&E, from Tampa Electric is predicted to allow for threat detection at a national level, spotting coordinated attacks or emerging vulnerabilities far faster than any individual utility ever could on its own. In essence, what they're building is a resilient private data nervous system for the entire national grid. And it's being built to support future applications that we haven't even conceived of yet.
That brings us from the technology stack to the business strategy. Anterix has clearly recognized that just holding spectrum isn't enough to accelerate adoption, especially with these long utility sales cycles. They've made a conscious effort to shift their identity. They're positioning themselves now as a full-service infrastructure partner. What does that actually look like in practice, and why is it so necessary?
It's a recognition that utilities don't just buy connectivity, they buy a solution to a multi-billion-dollar problem. So this consultative approach is paramount. Anterix and its rapidly growing Anterix Active Ecosystem, the AAE, which now has over 125 technology innovators, including the big guys like Ericsson, Nokia, and GE Vernova, they don't just sell gigahertz of spectrum. They're working directly with the utilities to solve the root problem, whether that's achieving the latency needed for DTT, or mitigating specific wildfire challenges, or managing their data migration.
So they're effectively providing the integration assurance and the project management expertise, which reduces the deployment risk for a utility's board of directors.
Exactly. By offering this pre-tested, mature vendor supply chain, they drastically reduce the customer's risk and the deployment complexity. They're selling maturity, not novelty. They are an end-to-end partner, ensuring the deployment is successful, not just selling a license and walking away.
And beyond their core licensing business, they've introduced new revenue pillars, initiatives designed to accelerate market penetration and capture revenue beyond the direct spectrum lease itself. These seem critical to understanding their potential billion-dollar annual market opportunity expansion.
They have two specific strategic initiatives that really broaden their market scope. First, there's TowerX. This is a strategic partnership with Crown Castle.
One of the largest independent tower infrastructure companies.
Right, and it gives them access to their 40,000 tower sites for PLTE deployment.
Access to 40,000 sites? That's huge.
Right.
What are the implications of that?
It fundamentally de-risks and accelerates the deployment timeline. Utilities don't have to spend years negotiating for and then building new tower infrastructure from scratch. They can just co-locate their 900 megahertz radio equipment on existing, proven Crown Castle sites. This partnership drastically lowers the barrier to entry and the overall cost of deployment, which makes the Anterix solution much more attractive.
And the second pillar, TowerX.
TowerX addresses a crucial operational hurdle for a utility's field staff. It's the company's first commercial platform solution, and it's designed for immediate device management and critically public-to-private roaming capabilities.
Why is roaming necessary for a private network? I thought the whole point was that it was air-gapped. How does that work?
It's a great question. While the command and control functions operate purely on the private 900 megahertz network, the field staff, the workers driving the trucks and making repairs, they still need ubiquitous data access. So when they leave the range of the utility's private network, their device needs to seamlessly and securely hand off to a public commercial network and then hand right back to the private network when they return. TowerX manages that transition and all the device credentials
So it reduces the utility's time to market.
by a lot. It immediately provides a solution for their mobile workforce while the main private network build-out is still ongoing.
So TowerX lowers the infrastructure risk and speeds up the build, and CatalyX lowers the operational risk and speeds up the functional deployment.
Precisely. And these two initiatives, TowerX and CatalyX, they are collectively targeting a projected $1 billion annual market opportunity. This expands the total revenue potential well beyond just leasing the spectrum.
And to further grease the wheels of adoption, they also launched a dedicated fund.
The $250 million AnterixAccelerator initiative, right?
Yeah, launched in March 2025.
Correct. And this fund is capital that's specifically dedicated to reducing deployment friction and costs for the utilities. It might offer financing, maybe cover initial integration costs, or subsidize specific technology development that's tailored to a utility's unique needs. It acts as a major catalyst to accelerate market adoption.
Let's just revisit the financial health to wrap up this section. The capital allocation strategy, particularly that share repurchase program, seems highly aggressive and incredibly confident, especially given the company's low market cap.
It absolutely reflects management's unequivocal view that their stock is drastically undervalued relative to the embedded asset value. They remain debt-free. They have $114 million in contracted proceeds still due to them, with a big chunk of that $60 million projected in the fourth quarter of fiscal 2026 alone. This cash flow stability is what enables such an aggressive move.
Talk about the buyback program itself. That's a staggering commitment.
The company has an authorized $250 million share repurchase program that runs through September 2026. As of March 2025, they still had $227.7 million remaining on that authorization.
So for a company this size, that remaining authorization, it's almost half their entire market capitalization.
It is. Management is signaling the highest possible confidence in their pipeline execution and the inevitable realization of that $3 billion asset value. They're effectively saying, we believe our own stock is the best investment we can possibly make right now.
And that confidence, at the end of the day, is validated by actual customer contracts.
Absolutely. This model isn't theoretical anymore, it's proven. They have signed agreements with 7 utility customers across 15 states, securing nearly $400 million in contracts. This includes major anchor deals like the $102.5 million agreement with Encore and the 20-year lease with Tampa Electric. They've established these regional deployment templates that other utilities can now follow, which reduces the perceived risk for new customers. And that $1.1 billion demonstrated intent pipeline, that just further validates that the demand is real and it's growing.
Okay, in the final analysis, let's synthesize the bull case. We've established the scarcity of the asset, the necessity of the technology. What is the fundamental justification for this investment thesis if we look past the current low JAP revenue and focus solely on that embedded value?
The bull case hinges entirely on the uniqueness and the competitive moat of the asset. This is exclusive, licensed, low-band, 900 megahertz spectrum dedicated to critical infrastructure. It simply cannot be replicated. This asset, valued conservatively at over $3 billion, is secured against a massive committed market that's spending $1 trillion on modernization. The immediate potential is defined by their total customer pipeline, which includes roughly 60 different utilities and represents over $3 billion in future revenue potential. The high PS ratio is, in this case, irrelevant. You're investing in the conversion of a locked asset, that $3 billion, into highly profitable, long-term contracted cash flow.
But the risks are massive, and they seem to be primarily centered on timelines and regulatory compliance. If the entire thesis relies on converting that asset value into revenue, then execution on spectrum clearing is the one singular metric that matters above all else.
That is the central risk imperative. The process demands flawless regulatory and logistical execution, and it carries significant timeline risk. While 85% of incumbents are cleared, that remaining 15%, they're often the most complex, most geographically dispersed systems. They require protracted negotiations and significant capital outlay.
Yeah, we don't know if those are small local systems or major regional ones.
The sources suggest they're the latter, which makes the execution critical and, yes, prone to delay.
So even with that 85% progress, any delays in obtaining the final FCC licenses for those last complex systems or just protracted negotiations could significantly push out revenue recognition and, more critically, the free cash flow timelines that are supporting the stock price.
Exactly. And furthermore, you have to remember that utility decision-making involves a long, multi-year sales cycle. These are multi-billion-dollar network modernization projects. They require approval from state regulators, the Public Utilities Commissions, or PUCs, and often the Federal Energy Regulatory Commission, FERC. So even if Anterix is technically ready to go, the utility's own regulatory approval process can impose multi-year delays that are completely outside of Anterix's control.
So the investment remains a high-risk bet, a bet that the company can execute quickly enough on its spectrum clearing mandates and on its consultative sales strategy, using things like the Accelerator and TowerX, to realize this deeply embedded value. And they have to do this before competition from alternative spectrum solutions, like maybe something repurposed in the 800 megahertz band to come to greater pressure, or before their capital commitments run into any trouble.
The final verdict, I think, is that the company's strategic positioning, its robust debt-free balance sheet, and its unique standards-based spectrum asset do justify the upside. But it's for investors who are willing to ride out the inevitable execution and timeline risk that comes with modernizing the critical utility grid. They have built the necessary operational and financial structure to withstand the long sales cycle, but the market really has to wait for those FCC licenses to be issued to truly unlock the stock's potential.
So the core tension, therefore, remains this. Anterix is a low JAP revenue, high cash flow business model built on a scarce, unique national asset worth potentially over $3 billion. The primary risk isn't customer demand. That $1.1 billion demonstrated intent pipeline confirms that. The risk is purely execution and regulatory compliance.
And if we just step back and look at the strategic necessity of this platform, a standard-based private network that's designed to enable cross-border communication and centralized national data analytics for threat detection across the entire utility sector. It really raises a profound question. Does the market need to stop valuing this as merely a spectrum licensing company and start valuing it as the foundational private nervous system for our national utility security? Because that level of systemic importance and the regulatory protection that would come with it, that's what truly justifies the multi-billion-dollar upside.
Risk defined. Portfolio protected.